Returns, understanding returns. So when it comes to investments, one wants to know the rate of return and what are the returns on investments. Hi, my name is Anuj Gupta. I'm an entrepreneur, mentor and advisor, founder of Tag Investments, a wealth management and taxation services firm having over 10 years of financial domain experience. We are licensed and registered with IRDA, SEBI and MCA. IRDA is Insurance Regulatory Development Authority, SEBI is Securities Exchange Board of India and MCA is Ministry of Corporate Affairs. Well, what is returns? It's simply put is equal to profits by your invested amount. So profits can come in form of dividend, interest, capital appreciation. So just now we'll stick to three types of returns which is generally prevalent in the industry. So one is called absolute return, second is called simple annualized return and third is called compound annual growth return. So all carry a different meaning and it can be misleading if you don't understand these terms well. So absolute return means the end value of the investment minus the start value of the investment plus any dividends interest received on the investments divided by the start price into 100. That's absolute return. Simple annualized return is equal to the absolute return divided by the time period into 100. So here absolute returns, they do not consider time period into consideration. Compound annual growth return is equal to the future value divided by the present value to the power of 1 by n, n is the number of years, minus 1. So let us look at these three returns from an example point of view to understand this better. Say somebody who had invested in 2016 100 rupees, in 2017 it became 200, in 2018 it became 300, in 2019 it became 400. Well, it's just an example. This is not a real-time example in terms of somebody who invests 100 rupees, it keeps on doubling. But for the sake of example, we are saying that from 2016 till 2019, somebody who invested 100 rupees, it grew to 400. So from a return point of view, if it was absolute return formula is end value, which is 400 minus the start value, which is 100. Assuming dividend interest is 0 in this case, so 400 minus 100, just 300, divided by start value, which is 100. So 300 divided by 100, 3 into 100. So the absolute return is 300%. So simple this minus this. That's the absolute return. Simple annualized return, simply put together, is absolute divided by the time period. So now the time period is 3 years. So the simple annualized return will be 300% upon 3 years into 100, which is 100%. So the annualized return was 100%. The compound annual growth return was future value is 400 divided by present value 100 to the power of 1 by n, which is 1 by 3 in this case, minus 1. So mathematically when we calculate via Excel sheet, it gives you a 59% return. So somebody who does not understand this or who understood the formula for returns. So an investor can think the absolute return was 300%, the simple annualized return was 100% and the compound annualized growth return was 59%. So all three gave different results and different returns, and that is why it is very, very important to understand how and what are returns in terms of absolute return, simple annualized return and compound annual growth return. Well, I'm sure this video would be of help to you. If you have further questions, you can leave a comment here and you can log on to our social websites and our website. And in case if you have any queries, you can leave a comment on the link below and we promise to revert to you. Thank you so much for the watch. Have a good day.